Hello everyone. So today we'll discuss about the basics of cryptocurrency accounting. This is pure educational content. So there's not any kind of like legal or financial advice. We have put together information from various sources like IRS guidelines and IRS FAQs, and we consulted with pretty good CPAs who are very savvy about cryptocurrency and try to get their inputs on like how to do the taxes on cryptocurrency. So this presentation is going to walk you through. Like the basics of like how everything is like taxed and what to keep in mind while trading and what all things you have to take care like keeping records and stuff like that. So let's see what's in there. Before everything, like what is cryptocurrency or how does IRS see the cryptocurrency? They define it as like virtual currency, and they're calling it like virtual currency and with a definition there. It's similar. It's not a real currency, but it operates like real currency. It can be exchanged between two individuals via an exchange or OTC or anything. It should have all those characteristics. Previously, they included like the in-game currencies too, like V-Bucks and Robux. But later they have removed, and currently we have only Bitcoin as the example on like convertible virtual currency. They define the rules on this definition, and this could change any day. So for now, Bitcoin is a virtual currency by IRS. So the most significant improvement this year is like on the tax forms, like everyone who files their taxes, there is a question on the tax form that says, at any time during 2019 did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? That means they are asking you. So did you buy currency, did you buy cryptocurrency, did you sell cryptocurrency, or did you acquire it like in any ways, like you earn it, you mine it, you stake it, or something like that? So they're asking you, and they're making sure that you are answering correctly. So be sure to answer the right thing on this form. So if you own, say yes, because saying no and still owning might not be a good idea, because you don't want any enforcement to happen on you. So what's IRS stand on cryptocurrency? So they're not like sleeping, they're like pretty active on the state. So they are pretty focused. They're pretty focused on understanding like what actually different activities mean in cryptocurrency and how to tax them, and they are giving updated guidance every. They are updating it very frequently. So if you see like updating guidance and jargon, like they are not just saying like it's a property like in 2014. They are now telling like what is an airdrop, what is a hard fork, how do you acquire, and what are the tax implication, what are the tax implications, what are the tax implications when you acquire in it certain way. So they're spending pretty good efforts on educating themselves, educating their agents, and educating the general audience, the taxpayers, also through their cryptocurrency FAQs. So they have pretty much extensive 43 FAQ sheet on their website. So the next thing is like they're the biggest customer of chain analysis. So what's chain analysis? So that's basically a blockchain forensic company which can analyze any blockchain, and which can build a complete trail on any particular individual by seeing their whole transaction flow. So they have all the capabilities of like finding tax evaders. Like if somebody is like not paying taxes on the cryptocurrency, just give their information and the system should be able to find out. Like they'll still find one single point of like entry, and from there anything can be uh, extracted, because blockchain is like very transparent. It's cash is much opaque than cryptocurrency or any blockchain currency, because cash you can't find a trace, but cryptocurrency you have blockchain that is public, and anybody can trace like where the money is moving from one address to another address. What else they have done? So they have sent warning letters and notices, thousands of them last summer. So they have all the information of like cryptocurrency holders sourced from various sources. Like they get 1099 submitted by exchanges, so they have information on who is buying on when you register on exchanges that are KYC and AML. So IRS has sent out warnings to those who has not reported the currency last year. So more people are now have to be self compliant. As I said, like it's exchange compliance and 1099K forms. So exchanges to operate in the US, they have to be compliant with the government regulations. So as part of that, they are mandated to send 1099K, a form which is sent to individuals who are trading more than 200 transactions, or who are trading more than $20,000 in currency. So their information, like what are the trades they did and how much of money went back to them, that information goes to IRS. So you have to report if you have received a 1099K. Though that particular form doesn't help you with taxes, but you have to report, you have to figure out and report it. So a question to ask is like, how can I be compliant? Like, if I'm an individual, I'm a good taxpayer, so I have been paying taxes for all my income and other things. So now I have cryptocurrency. So how do I pay my taxes on cryptocurrency? So first thing is, for the question that I have shown earlier, say yes to that. And next thing is like, you have to report the income. You have to calculate how much you have earned in cryptocurrency, like you have been paid in crypto, or you have been earning income in crypto for making YouTube videos or something, or you have been doing some promotions for any project, like cryptocurrency project, and getting paid in tokens. So you report all this income. And also you consider your trades, you calculate your gain loss and report the gain or loss on your trades. And the most important thing is like keeping good records of whatever you have been doing on cryptocurrency. Like with cryptocurrency you have been doing something, then make sure you keep a good record of it, because even the most good, like famous exchanges could be hacked or could get like out of business because of like something else, complete external factors. But your documentation should be important. Like you should have like all the trade history with you, download it every month, keep the CSV records with you, so that you can calculate gain loss any day and be compliant. So for you to calculate gain loss, you have to understand like what are the taxable events. Because when you go onto the internet, some people say, hey, only when you take out to bank you pay the taxes, or somebody says like only when you trade to USD you pay the taxes. And somebody will say like everything is taxable, you buy, you even you buy, it's a taxable event. But you have to understand what's the right thing. So the right thing is like, according to IRS, it says whenever you trade, you sell your crypto to USD, that's the fiat currency, or you sell crypto to another crypto, like you're buying ether with Bitcoin, then that's a crypto to crypto transaction, that is taxable. So crypto to fiat selling and crypto to crypto transactions both are taxable. So whenever you convert ether to Bitcoin, so that means you're selling ether for USD and you're buying Bitcoin with USD, consider it as like that. And then you see like there is a sell event. So whenever a sell happens, that's a taxable event. And you will be also performing, you might also be performing like you might be lending your cryptocurrency, you might be staking it, or you mining it. So for all those things also you have to understand like what are the tax implications. Like when you lend, you earn interest on it, so that's an income. And when you're staking it, you get free coins for staking it, so that's another income. And when you're mining it, you're spending your what do you call, like operational expenses. You run your machines, you pay for the power and you pay for the machines, and you mine it, and you make a UN cryptocurrency. So you have to define like what it is, a business or personal, or how, when you can deduct those expenses, and what is your net gain or loss. So all those things you have to calculate. So the may yeah, so the taxable event is like whenever you sell, that's a taxable event. So as I said, like that there are multiple ways to acquire cryptocurrency. So acquiring is not just by buying. So somebody might gift you, or you might stake the cryptocurrency that you have in a proof of stake algorithm, and you earn cryptocurrency on the assets that you have staked. And there could be airdrops, like some people, to encourage the network effects and more people having their coins, will encourage more people to use their application. So what do? They give free currency to all cryptocurrency holders. So that's called airdrop. That's being airdropped literally to the people. And voting rewards, sometimes some of the exchanges put up some contests, like there are two projects, like where do you vote, like you vote for this, you vote for that, and winning, and the winner gets like whichever currency wins will give out this much currency. So that's called voting rewards. And community rewards, you work for certain project and you get paid in crypto. You work for certain project to monitor their community, manage their community, and you get paid in their tokens. So that's community rewards. And on Coinbase Earn or any other things, like this the digital asset version of Mechanical Turks. So you do some kind of tasks and you get paid in crypto. So you perform some kind of like step-by-step tasks, and finally you get like a hey $50 worth of bat or something. So you earn for tasks. And there could be hard forks, like the cryptocurrency project splitting in two ways, and both of them having different version of their currency, and that's hard fork. And you might get referrals, like you do referral bonus and you get paid in Bitcoin, and you do mining and you get deposits in Bitcoin. So all these types of ways you will be earning income in Bitcoin or crypto, other cryptocurrency. So all these things you have to declare it as income. So for all those things, like let's go back. So for all those things, you have to calculate in USD how much of it is worth based on the timestamp when you received it, and declare it as like that much USD is your income. So after income, it's the capital gains or losses. As I said, to be compliant, you have to declare your income, and the next is you have to calculate your capital gains or losses. So as I said, the crypto to crypto trades are taxable. So crypto to fiat or crypto to crypto. So you calculate your capital gains based on like whenever you sell, whenever you sell, you store that. You calculate your capital gains or losses. To calculate this gain or loss, you can use couple of algorithms, like you can use 5-4 life for specific identification. So according to the recent guidance by the IRS, so say you can, they say use, you can use specific identification or first in first out by default. So first in first out is like you buy a Bitcoin today and you sell a Bitcoin tomorrow, and you sell another portion of the same Bitcoin day after tomorrow. So it's like the first buy is matched with first sell, first second buy is matched with second sell, so something like that. So first in first out, you understand the concept. So we can go more into detail in another video, but today we'll see like it's a first in first out mechanism. And specific identification is like, okay, I bought this lot of cryptocurrency, and then I sold the specific lot of cryptocurrency. So if you can identify the lots, like when you're doing business or you're doing buying it for your clients or something, then you'll have a clear set of lots, like what did you buy for and what did you sell for, so you can match them exactly without following first in first out. So what are the types of gains or losses? So there are two types: short-term gains and long-term gains. Short-term is like whenever you are holding it for less than 12 months and selling it, that's the short-term gain. It's taxed at a much higher rate, so it ranges anywhere from 22 to 37% uh, on your gains. And long-term gains is like if you are holding an asset for more than so if you are holding an asset for more than 12 months, then you might have a long term gain. So that's like it's taxed at lesser rate, so it ranges around like 15%. So it's always better to hold for long term to get that benefit, because even like uh, capital gain of 2000 will $2000 could lead to about $300 in difference, like between short term and long term. That's not less, that's like 15% difference. So when you're trading, make sure to understand like what are the implications and how much are you making. It's not just the profit that you're making, it's you have to calculate the taxes on it and then figure out like how much are you making. So claiming losses. So it's not always gains. Like if you're a poor trader or average trader like me, you will end up in losses. So when you have losses, so you can claim them on your taxes. So this is not like a hard and fast rule, and like everybody can do it. But in general, you can claim up to $3,000 as an individual. You can claim up to $3,000 in capital losses per year. So you put together your stocks, real estate investments, and cryptocurrency trading, all the gains and losses together, and see like if you have more than $3,000 in losses, you can claim up to $3,000. And what do you do with the remaining? You can carry forward to the next year. So if you have lost like say $12,000, you claim $3,000 this year and carry forward the other $9,000 to the next year. So if you make like $10,000 profit next year, so that offsets like the 9,000 and 10,000 get offset, and you'll have a $1,000 gain, and you pay taxes only on the $1,000 next year. So that's how you can claim your losses and carry forward, but it's not applicable to everyone. It's not a blanket rule. It depends on case to case basis, so it's not any financial advice, so I'm just telling in a generic sense. So you need to find like what forms are needed for your particular case. So additional income, you will be reporting capital gains or losses, and you will be reporting additional income. So for that, what forms are needed? Like 1040 schedule 1, 1040 schedule 4, and schedule D, and other things like 8949 capital gains document. All these forms are needed. So we will you can reach out to us to understand like what are the forms needed, or you can go to our website and see what are the forms needed for filing each kind of cases. So audit trails is another thing. Like this is very helpful in the case of an audit. So when an IRS agent when IRS sends you an audit, and they send you an agent to find out like what did you buy and sell and what did you actually file on taxes. So if they have to find it, you need to have your audit trail. So audit trail is a way of like tracking the buy and sell, and how did you match, and proving basically the algorithm that you use, like FIFO. So you can show like on what date you bought it, on what date you sold it, and how much did you buy, how much did you sell. So this exact mapping and everything, like one particular buy could have spawned into multiple cells, so you should be able to show that. So this exact thing is called audit trails. And if you have this particular document with you, like you create that out of a software like BearTax, and you keep it with you, so you will be like very confident, like whenever somebody comes to you knocking your door, knocking your door, then you can show them like, here is my complete trail and I can prove it. So that's how you prove how you are legitimately filing your taxes. So that's pretty much it. So if you're looking for just the basics, so those are the things that you have to understand. So whenever you're trading, make sure your short-term gains or long-term gains, what are you incurring, and are you accounting for the taxes that you're going to pay on the gains, and then seeing like you reached your target profit or not. So if you're just putting a profit of like 16% or 15%, then you have to also consider like how much of the taxes are going, and ultimately what is the net gain that you're making. So the things you have to keep in mind, and what are the taxable events you have. Like you need to have idea of like which activity is taxable event, and you need to keep track of all the records on various exchanges, because you don't know what exchange goes down on what day. And you have to keep track of your income whenever you are paid, whenever you get airdropped, whenever you receive some commission or referrals, anything. You have to keep record of everything and declare that. So that's how you can be compliant, and you can be peaceful, and be on the right side of the line. So I know it's all overwhelming. So yeah, for someone who has like more than 50 trades, doing all this by hand and keeping the audit trails, it's very hard. So what we did is like we try to automate everything and provide a software for you, so that you don't have to struggle and um, um, take that headache of doing everything. It could take like days, like hours, tens of hours and days to do all these calculations. So our software, it can all do it in minutes. Like you just import from every exchange, you do the FIFO or LIFO or specific identification, and it generates documents for you, like the 8949. It's served for you, filled, pre-filled with your name and details and everything. So this is how it looks. So we call it BearTax. It's a cryptocurrency accounting software. You go to www.bear.tax, and once you're all done, and when your calculations are all done, you see like it looks like this. You can download your 8949, your CSV for your accountant, and audit trail. And you can export to TurboTax. Like if you are using TurboTax to file yourself, or Tax Act, you can just export it to their format and import it there. It's such simple. Like it's so simple, and you can do it everything in like 5 minutes. And if you are a huge heavy trader, like day trader, and you have thousands of transactions, the platform can handle them well. We have calculated more than like 200 300,000 trades like per person. And also like you don't want to submit like hundreds of pages of your gains, right? So you can get aggregated versions. So you aggregate everything by coin, and you can submit that and keep the detailed one for your records if somebody asks you. So what does the software do? It does generate 8949 capital gains documents. It fills everything with your gains and losses, your details and all. A comprehensive auditable CSV. So this CSV shows the complete trail of like how the transactions happened, where did it flow, and you can give it to your accountant for audit purposes or anything. And we provide aggregated versions, as I said, and you can export to your favorite tax software. Like if you're an accountant, you can export it to Drake software and other CCH and other things too. So that's about it. Thank you. So as I said, I am Vamshi Vangapalli, co-founder and CEO of BearTax. Follow us on Twitter at bear_tax, and our website is like www.bear.tax. So why bear? We are bearish on taxes. Thank you.